Boom shakalaka, a very bearish Bitcoin head and shoulders. Is this the nail in the coffin, or is this a fake out before we see Bitcoin repeating its normal pattern? Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're taking a look at the gigantic market crash down almost 8% today. This massively bearish Bitcoin signal. Is this the nail in the coffin? Is it time to panic? Or is Bitcoin about to repeat history? Before we get into it, guys, make sure to like, subscribe, click the notification bell. Come join us over on Twitter at @CryptoLove. Push the like button. And let's get into it. Today, extreme fear, 21 down from yesterday, just regular fear. And I suspect tomorrow will be even more extreme fear below 20. The overall market down 8% today. Bitcoin at 18,480, Ethereum at 1301, BNB at 259, XRP 34 cents, Cardano 43 cents, Solana $31, and Dogecoin 5 cents. And if you want to know the top coins based on AI and machine learning, we have Ascendex, Chainlink, Cosmos, Chiliz, and XRP, but also look at how much of the portfolio is stable coins. You can check out Token Metrics, link down in the description. Now, Bitcoin today completing this head and shoulders we talked about last week. Not good, has broken below the $20,000 support right now at the 280 weekly moving average. If you can see, this is actually wicked below there, which historically Bitcoin has never done. This has been support for Bitcoin in every case. Now this head and shoulders right here, if we take the length of the head right here and put it to the downside, this is exactly where Bitcoin could wind up, right around $13,700, which if we zoom back out, this is where Bitcoin has had some support resistance lines recently or previously. This was back in 2019, the resistance line right there, which could potentially be support this time around. So things are looking potentially very bad for Bitcoin if this 280 weekly moving average doesn't hold. But if we take a look at Bitcoin, just taking a look at a very, very reliable indicator, as a matter of fact, probably one of the most reliable indicators, it's never been wrong, the pi cycle top and the pi cycle bottom indicators. Now the red lines here are the pi cycle tops. The green lines are the pi cycle bottoms. And historically, we've had 413 days between a top and a bottom, and 364 days here, and 455 days here. So we actually had the longest distance between a pi cycle top and a pi cycle bottom indicator in history. And then if we take from that bottom to just where Bitcoin price regained the pi cycle top levels, basically this white line from the bottom to that area, it was 784 days, the first one. It was 728 days, the second one. Well, average those out, that would be roughly 756 days, putting us back at $70,000 roughly by August of 2024. So almost a year from now it'll take to regain those levels. But right now people are very, very fearful about price continuing to drop. So let's take a look at some of these scenarios. Right now, currently over 25% of adjusted circulating supply at last move between 1 and 2 years ago. We can see this visually. Last time we had these levels of people holding Bitcoin was in the very bottoms of the bear markets. As a matter of fact, in 2019 and also in 2013, it was already on the way up. It wasn't just in the bottom, it was already on the way up. We can take a look at a lot of Bitcoin bottom indicators. Okay, so we have the delta cross, which is the delta price divided by the coin value days destroyed. Guess what? This signaled on June 10th. Already signaled that the bottom was in. You can see it picked out the 2019 bottom and the 2015 bottom and the 2012 bottom perfectly. If we take a look at the deep value crosses, which is 135-day EMA divided by the 730-day SMA, this one, June 18th, it signaled there. Guess what? It also picked out the January 2019 bottom and the 2015 bottom perfectly. If we take a look at the pi cycle bottom, okay, this one here, it flagged July 13th. This one picked out the 2019 bottom and also the 2015 bottom perfectly. So there we have three charts which picked out the bottoms previously perfectly, have already signaled saying the bottom is already in. However, if we take a look at the cost basis cross, which also picked out these bottoms, which is a short-term holder cost basis divided by the long-term holder cost basis, this picked out the bottoms of 2019, 2015, and 2012. And guess what? The projected cross has not happened yet. It's going to happen in about a week. So maybe the bottom may occur in a week or thereabouts. And if we take a look at this chart right here, we have very similar developments happening. If we take a look at the percent of addresses in profit, we can see down here at the bottom Very similar structure right now to what we had back in 2018, 2019, where we had this double bottom in percent addresses and profit. We also had a double bottom in price. Well, we see the same thing, double bottom addresses and profit, double bottom in price. If this holds, we all know what's coming next, because Bitcoin has a consolidation, a 30% consolidation that happened in 2018, 2019. Very, very similar to what happened previously. We had a bit of consolidation, price drop, and then basically a 30% trading range where Bitcoin has been hovering in for a long time. It hovered here for 133 days. This not yet done 133 days, just bouncing back and forth before look what happened afterwards. Price shot up dramatically. And if we take a look at a longer scale, potentially macro harmonic pattern for Bitcoin, we can see it right up here, ABCD before blast off. If we take a look at Bitcoin, ABCD before blast off could be sending Bitcoin in the future, because not every chart, 99% of charts are suggesting that Bitcoin is repeating. And while history doesn't repeat, it does rhyme. Now, this time is different because we have quantitative tightening, we have recession, we have bear market, we have war, we have energy crisis, all these different things. But guess what? In bear markets, the world's always falling apart. The sky is always falling in bear markets. And if we take a look at 2014 and 2018, take a look at this, where we have the short-term holder cost basis, the mezzanine, and the floor. We can see Bitcoin price breaking through, bouncing off the floor, finding support on the mezzanine before breaking back up. Happened in 2014. Same thing happened in 2018. Look at what's happening right now. Same exact thing is happening right now. Doesn't mean that Bitcoin is going to repeat itself 100%, but maybe it will. Because right now, we have a historic number of people betting on the whole entire world falling apart, just like collapsing. And it may happen. I mean, this could be the first time in history where every trader has been right, betting on the world falling apart. It could happen, but sometimes there are charts that just blow your hair back. I thought that was going to say blow the hair off your back, but in 22 years of doing this, none stand out like this one. Sentiment Trader here says that last week, institutional traders bought $8.1 billion of put options. They bought less than $1 billion in calls. This is 3 times more extreme than 2008. Now, a put option is basically them betting that the market is going to crash. Is it possible that this many people, this many institutions are right this time? Unlikely. The market likes to disappoint the most people possible. However, it could very well happen. But it just seems unreasonable that this time everybody knows what's going to happen. It seems a little bit unlikely to me. As a matter of fact, what we may have is the bottom coming in very, very shortly, because we've talked about how November would be the time frame where we had that 50% price drop if Bitcoin repeated what happened in 2019. Well, if that were to happen, we could have a bottom right here around the time of the Citadel-backed crypto exchange targets, November for soft launch, January for official launch. The exchange called EDX Markets is backed by Charles Schwab, Fidelity Digital Assets, Paradigm, Sequoia Capital, Citadel Securities, and Virtue Financial. Could it be where the price is just going to crash until then for all these giant guys, Charles Schwab, Fidelity, Paradigm, Sequoia, Citadel, all of these guys, to scoop it up at bottom prices before it takes off? Well, that seems very, very reasonable to me, because right now, where we are right now, could this be the expected Bitcoin bounce that everyone is looking at, the 200 SMMA, when we had it bouncing off of this trend line right up here? It fell all the way down to the 200 SMMA and then bounced all the way back up to that trend line, found a little bit of resistance there, again, resistance support, falling down to the 200 SMMA, which is right around $18,000, right where we are right now. Potentially could bounce all the way back up to there by maybe the end of the year, beginning of next year. Or if we take a look at the up and down volume ratio, the market breadth indicator shows the relationship between the volume of up days and down days. Greater than 1 is bullish, less than 1 is bearish. And if we take a look, the breakout of the UDVR trend line in Bitcoin could give a new bull run again. Bitcoin may have already found its bottom. Now we can see down here the up-down volume. When we had a breakout of the trend line, this indicated the beginning of a bull run. Breakout of trend line, beginning of a bull run. Breakout of trend line, beginning of a bull run. If we take a look right here, we have, as we speak, a breaking out of the trend line, hovering right around the trend line. If we can break out of this, could suggest price moving up dramatically. So which direction Bitcoin is going, how long it will take, I don't think it's going to be something overnight, but then again, I can't predict the future. So that's all for today's episode. If you did enjoy it, push the like button. I'll catch you guys later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.